Hello, hello. Let me check my phone just to make sure we are actually live here. Let me pull it up. Let me make sure volume is working. Video has no sound. All right. Let's see. Make sure volume is working. There we go. It is. I don't know why it said video has no sound. So hopefully you guys can hear me. Let me check in the comments here. Hey, Michelle. Hey, Facebook user. I'm not sure who it is because it just says Facebook user. You actually have to grant StreamYard permission in order for me to see your name. So right now we are going to be streaming onto my YouTube channel. We're going to be streaming into my private Facebook community, The Profit Factor, and then also onto my business page, The Chic CFO. Since I'm using StreamYard, you'll see a little button at the top that says give StreamYard permission to have your name. This way, when you guys ask me questions, when I go into my comments, I'll be able to know who it is. This Facebook user says, how is your hair always so great? Thank you. I don't know who it is. So it's not. It's actually like a hot mess in the back. You just can't see the back. I take like one of those round blow dryer brushes and I only do the front part right here, which literally takes me 3 minutes. So that's it. The back looks like a nest, a bird's nest. Hey, Denai, love your hair. Thank you. Thank you. Okay, so if you are new here, my name is Denai Wolfe. I am a financial clarity coach and a profit strategist, which means that I help entrepreneurs understand the money things in their business. Now, I help you guys do this because I believe that if you understand how the money works, you're going to be able to make more of it. So I'm really committed to helping you guys increase your profits and decrease your stress. And I do these live trainings once a week. You can find them in my private Facebook community, The Profit Factor, or on my YouTube channel. So today we are going to be talking about what each and every one of you needs to be doing in order to close your books for last year. So this is going to be a step-by-step process that all of you should be doing in order to make sure that everything is closed and ready for you to file your taxes. So let's start with what exactly do I mean when I say, we need to close our books? Well, closing your books is literally just the process of making sure that all of your financial records are accurate. Right? So it's this process of making sure that we go in and cross-check each and every transaction so that we know that it was all allocated properly. Now, you can close your books for any period of time, right? So you could go in and close your books for a month, or if you have not been doing that, right? For my clients, I do it every single month. But if you haven't been doing that, then you guys are going to have to do the entire year. All right. Now, if you don't actually do this, right, if you don't take these steps to ensure the accuracy of your financial reports, then you're not going to be able to guarantee that your records are accurate. And if you can't guarantee that your financial reports are accurate, then your tax preparer won't be able to guarantee that your tax bill is accurate. Now, I don't ever want you to pay a penny more in taxes than you actually owe. So that's why it's really important that we go through these steps to make sure that your financial records are accurate. Your tax return will be completely wrong if your financial reports are wrong. So that's why these steps will really help you. So what I'm going to lay out for you are specific steps that you can take in order to make sure everything's accurate so that you can have confidence that your tax bill is correct, because I don't want you guys paying any more in taxes than is necessary. Now, before we get into this, let me just give a little disclaimer here, okay? Everybody's situation is going to be unique, right? So I do suggest that you work with a professional in order to ensure the accuracy of your books, all right? Especially for 2020. If you guys have been hanging out with me, you know 2020, all about the EIDL, the PPP, the unemployment, all of that stuff, right? There were so many different COVID relief moving pieces in 2020 that even if you've never worked with a professional such as myself, this is definitely a year to consider it. All right. I don't want anybody making a mistake that's going to bite them in the butt later because they're just not in tune with what went on with the COVID relief. Now, if you are willing to hire a professional, please just make sure that they are well versed in COVID relief and how it needed to be categorized and allocated and everything like that. So just ask them, make sure they are up to speed. If you guys have been hanging out here, you know that it is changing almost daily, right? Like things changed so much. So just make sure that they stay abreast of the information and they are in the know. Now, if you guys want to hire me, yes, shameless plug, shoot me a PM and I will get back to you so that we can schedule a consult call. All right, so let's dive into the very first step. So the first thing that you need to do is you need to record all of your income and expenses. Now, I am a big fan of QuickBooks Online, all right? But I know that not everybody is using an accounting software such as QuickBooks Online. At minimum, guys, you can absolutely use a spreadsheet, all right? You can totally use a spreadsheet. The idea is that you need to get all of your business checking accounts, savings accounts, any bank accounts, any business credit cards, all of your financial statements for your business. This has nothing to do with your personal. This is going to be for your business. You're going to gather all of those accounts, all of the statements for every month in 2020, and you want to make sure that you have all of the revenue outlined and all of the expenses outlined. Now, I want to make sure that you guys know when you're going through your bank statements and you're counting deposits as revenue, please be careful to make sure that if you did get any COVID relief, you don't count that as revenue. All right. So we want to make sure that if you received PPP, that if you received unemployment, that if you received the EIDL, we don't want that logged as revenue, okay? So when we are recording our income for our business, we are specifically looking at just what your sales were, all right? Then we're going to be looking at our expenses. Now, when we're talking about our business expenses, please make sure that you are not counting anything that was personal, right? So if it was, you maybe ran to Target and you only had your business debit card with you, right? You're going to go ahead and categorize that as saying that was an owner's draw, okay? We don't want to say that that was a business expense. So be careful with that stuff. We need to separate it. Now, best practice, which this is really a topic for another video, you shouldn't be purchasing anything personal out of your business bank account because it's just going to make it much easier when you have to go in and record all of these expenses. Now, once you have all of your expenses laid out, I want you to take a look at them and ask yourself if any of them were big ticket items. So if you bought any fixed assets. So these are items that you purchase in your business with the idea that it's going to be an investment that's going to last you for years to come, such as maybe you purchased a brand new fancy 3D printer because you make widgets in them and that's what you sell. Maybe you purchased you're a cleaning company and you purchased a new car, right? So these big ticket purchases, these fixed assets, I would scan through your expenses, and if anything is over $1,000 for something that you purchased, that is going to be an investment in your business. Now, this is not something where maybe you ran a Facebook ads campaign for $2,000. We're not talking about that. We're talking about an actual piece of whether it be an equipment or a computer or a car, something that you purchase as an investment in your business. Get those highlighted so that you can give those over to your tax provider, right? Because they have to be handled differently and it's a little bit complex, and that is a video for another day. But go ahead and separate those fixed assets. Then you're going to want to reconcile each and every month for each and every financial account you have. So what do I mean by reconcile? Well, remember how I said that you're going to get all of the bank statements, right? And all of those transactions have to be entered into QuickBooks Online or your spreadsheet, whichever one you're using. Reconciliation is literally just the process of whipping out your bank statement and comparing it to wherever you did this record keeping. So maybe you have it in your QuickBooks Online file, or maybe you have it in your spreadsheet. Wherever the place is where these transactions are living, just compare it to the bank statement, because you would be surprised how often mistakes happen, right? Even if you have your QuickBooks set up where it's auto importing, which I strongly recommend, but if it's importing your transactions on a daily basis, I see glitches all the time. Maybe you did 200 transactions in December and only 199 imported, right? So when it comes to accounting, you guys will learn we don't even want to be off by 1 penny. We want everything to be perfect. So you literally go line item by line item on your bank statement. So I literally like to print this statement, have a ruler, and slide it down through each transaction, and then make sure that it's in QuickBooks Online. This is that process of making sure that we didn't miss anything, right? That's how we know that everything is accurate. Now, let's say you're like, oh, this is on my bank statement, but it's not in my QuickBooks Online. Go ahead and manually add it into QuickBooks Online. Now, if it's in QuickBooks, but it's not on your bank statement, you have to delete it because it should not be in QuickBooks Online. Now, I will say there are certain times where you shouldn't be deleting things in QuickBooks Online, specifically if it is a payroll check that we're waiting to have clear. So again, I would default to your professional, whoever you're hiring to assist you with this. And again, I strongly urge you to make sure that you are working with a professional. This is not a year to use TurboTax. All right, let me just check. I have some questions real quick. Heather is saying, hey, somebody said share these on LinkedIn. If you guys hang out here, you know I am technology challenged. So if somebody wants to tell me how to share this on LinkedIn, sounds good to me. Somebody else saying, hey, hi everyone. Hi, Diane. The rest of you, if it just says Facebook user, I am unfortunately missing your name, but hello to everyone. All right, so now that you have entered in all of your revenue, all of your expenses, and you've gone in and cross-checked it with your bank statements, I now want you to match your revenue to your actual point of sale reports. So this is going to be a little bit more high level stuff, and this is something that I definitely want you to make sure you speak to your bookkeeper about. But essentially what happens is, let's say you did $1,000 in sales today, right? And that's what was, sent through Stripe. Your clients paid you via Stripe. Well, you guys know that Stripe is going to remove their fees and then deposit the net into your bank account. So what happens is at the end of the year, Stripe is going to report to the IRS that your sales were $1,000. But if you only record what hit your bank account, you might show sales of $990. And the IRS is going to say your sales are off by $10. Why are you under-reporting your income, right? So the proper way to do it is you need to get the gross sales from Stripe. You enter that in, and then you add the Stripe fees as an expense so that the net effect is exactly the same. This is one of those things that can be a little bit more complex for the average entrepreneur to do. So again, just make sure that you speak to the professional you're working with. You just want to ensure that your revenues, in fact, match your point of sale reports. The next thing I want you to do is take a look at all of your liabilities. So even if you didn't have liabilities before 2020, chances are you have them now. So what do I mean by liabilities? This is any type of debt, right? So you might have a bank loan, you might have a line of credit from your bank, a credit card, your EIDL loan, right? When we're dealing with debt, we have to actually split the transaction. So what do I mean by split the transaction? Let's say you make a $500 payment to your loan, and let's say 50 of it was for interest, 450 of it was for principal. You have to make sure that in QuickBooks Online, you book the $50 to your interest expense because that is tax deductible. So if we don't split out that interest, you're not going to receive the tax deduction. And we don't want that to happen, right? That's how you end up paying too much in taxes. Then that $450 needs to get allocated to the principal, right? Which means it needs to go to that liability account to reduce the balance that you owe. So the first scenario that could happen is that you're booking the entire payment to that liability, in which case you're not getting the tax deduction, and now you're paying more than you should be in taxes. The second thing that could happen is you're booking the entire expense, that entire $500 payment, as an expense on your P&L, which means you are wrongfully counting that as a tax deduction by $450, right? Which means that you're now evading your taxes. Also not good, right? I don't want you to overpay, but I certainly don't want you to underpay, right? I want you to pay exactly what you owe. So this is a really important step, making sure that the only expense for your liabilities that is listed on your P&L is the interest expense, as that's the only thing that is in fact tax deductible. Then you're going to make sure that all of the principal payments are sitting on the balance sheet, therefore reducing what you owe. And when you look on your balance sheet, if it says you owe, your Wells Fargo bank loan balance is, say, $5,000, $5,000 should be exactly what the bank statement says that you owe. The two should match. Now, let me hop in and see if there's one more. Hi, Stephanie. I keep checking over to see if there are questions, but it's just been you guys saying hi. Hi, Steph. All right, so the next thing I want you guys to do is I want you to go through all of your personal accounts, guys, okay? This is a really important step, all right? This will affect your taxes, so please do not skip it. Go through all of your personal bank accounts, all of your personal credit cards. Scan all of the statements. Did you purchase anything for your business with personal funds, all right? If you did, I want you to get them all into a spreadsheet. If you are QuickBooks savvy, go ahead and journal entry them in. If you are not, I want you to give this spreadsheet to your tax preparer, and I want you to say, hey, I spent this money for my business from my personal account, which means these expenses have not been entered onto my profit and loss statement. Can you please get these entered in? They will be able to take it. They will be able to handle it. But I don't want you to skip this step, because if you do not go through all of your personal accounts and pull all of those expenses, you're not going to get the tax deduction, and then you're going to overpay in taxes, which I do not want to have happen. Now, if you know that you are incredibly disciplined and you absolutely never, ever purchase something from your business personally, then skip this step. But if you're like, I may have, please do an audit of your personal accounts so we can make sure. And honestly, I'd have your spouse check as well. You know, if you've ever been in a situation where your spouse is out and they happen to be at Staples and you're like, hey, we need ink, right, for the printer, just, have them check theirs as well, just in case they also made a purchase for your business. All right, the next thing I want you to do is review your accounts receivable. Who owes you money, right? This is your AR account. Does anybody owe you money? Did you maybe send an invoice in November and they still haven't paid you? Does somebody maybe from back in February owe you money? Especially with everything that happened with COVID, you might be in a situation where people owe you money and maybe they're not in business anymore, right? Maybe they have already gone under. Their business didn't survive the pandemic. So I want you to go through this list, and then if there are individuals on there that are not going to pay you, right? You know that they're not going to pay you. Talk to your tax preparer about writing off this debt, all right? An important step. Then I want you guys to check your AP. This is your accounts payable. So this is the money you owe. So your AR was the money owed to you, but your AP is the money that you owe. Take an inventory. What are all the bills that you owe? And get up to date. Pay those bills, make arrangements to get the bills paid. We don't want to walk around with a high balance in AR, with people owing us money, and with a high balance in AP with us owing other people money. So we definitely want to go through at the end of the year and make sure we get all of that cleaned up. The next thing I need you to do, and you absolutely must do this, okay? I feel like I get asked this a lot. Like, do I really have to do this? Yes, you really have to do this. You need to take, if you are a product-based business, let me throw that out there. If you are a product-based business, you need to take stock of your inventory as of 12/31/20, all right? So at the end of the year, we need to know what is the monetary value of everything that you have in stock. Go through, get it all in a spreadsheet, get this over to your tax preparer. They can make the journal entries for you and make sure to get everything up to date on your balance sheet so that we accurately know how much you had in inventory at the end of 2020. Again, guys, I know there's a lot of steps here. Call me. I want to work with you. I want to help you. And if I am not a good fit, I can work to get you matched with someone who is. Okay, the next thing I want you to do is go through the records that you're showing of what you paid in sales tax. So remember how one of the first things we did was we outlined all of our expenses, right? You should have a list going of what you believe you paid in sales tax. You're going to log into your sales tax portal, right, for your state and confirm the numbers, all right? You want to confirm the numbers and make sure that you're showing the same amount. Now, if you have sales tax, let me do a really quick little mini lesson here and let you guys know. The way that sales tax works is your customer actually pays it. So let's say you sell something to your customer for $500. They end up paying you $525 because $25 of it is sales tax. Remember that step in the beginning where I said you want to match your income, your revenue, to your point of sale system. Because if you counted all $525 as income, as revenue, that would be wrong because the $500 is revenue. The $25 is sales tax. And the sales tax is going to be collected from your client and then you're going to pay it right back out. It just goes in and out, right? So it is neither income nor an expense for you. You're kind of the middle person, right? You're the middle person. So make sure that sales tax is not being recorded as revenue, which it won't be if you follow the step to match your revenue to your point of sale system. The next thing that I want you to do is to check your payroll records for your profit and loss for 2020. We're going to match it to what the payroll reports are showing you from your payroll company. So whether you use Gusto, which is my personal favorite, or ADP, whoever you use, they're going to be able to show you everything that you paid in sales tax for the year, what your gross wages were. Get that breakdown of the reports and just make sure that your profit and loss properly reflects that, right? We're going to match it up and make sure that everything is being reported the same. Because if it doesn't match your payroll reports, then something was categorized wrong, something was allocated wrong, and those two should always match. The next thing that we have to do to close our books is depreciation. Depreciation is totally a lesson for another live, but let me kind of give you the Cliff's Notes. Remember earlier how we spoke about when you purchase fixed assets, right? These are those big ticket items you purchase in your business. So these investments made in your business, maybe it's you bought a piece of equipment. Let's say it was $5,000. You are not able to take a deduction of $5,000 all up front. So you're not able to put that $5 expense on your profit and loss. You have to depreciate it because you're saying, I spent this much money because it's something that is going to provide me with a benefit for years to come. So let's say we believe this piece of equipment will be functioning in your business and helping you generate in your business for 5 years. That means we can divide up the cost over 5 years and you can get that deduction over 5 years. So you paid $5,000 for a piece of equipment. It's going to last you 5 years. That means you're going to have a $1,000 expense every year for 5 years. All right. This is depreciation. Anytime you purchase a fixed, asset, a big ticket item in your business that you believe is going to help you generate revenue, you should get a depreciation schedule from your tax preparer. You can literally attach the document in QuickBooks Online. This way, you're able to reference it easily, whenever you're like, how long is that? Is it 10-year depreciation? Is it 5-year? And you will set up journal entries in order to make sure that you are actually getting the expense. I cannot tell you how many times I've stepped into a situation where a client was savvy enough to know that they couldn't expense that $5,000 piece of equipment, right? So they put it on the balance sheet, they didn't put it on the P&L, but they didn't know that they could depreciate it and every year get that tax deduction. So now they've never received a tax deduction for the item. So really, really important that you are working with a professional to get this entered in and set up correctly, because again, I do not want you to pay a penny more in taxes than you owe. So you guys are probably thinking, number one, this is a lot of stuff. There's a lot of stuff to do, right? We've got a lot of steps that we have to take. But you're probably thinking, when the heck do I want to do this? Well, you really want to have this all done now, because your 1099s, which if you tuned in last week, we did a training on 1099s, those are due February 1st. So we want to make sure that our financial records are accurate. Now, at minimum, if you're like, Denai, there is no way I'm getting all of this done by February 1st. That's okay. Take a deep breath. Take a deep breath. Here's what you're going to do. I want you to at least go through and make sure that all of your contractor payments are properly allocated. Okay, so go back to last week's video. We will explain who needs a 1099. Go through your bank statements and make sure that you have an itemized list of everything. The individuals that are owed a 1099, you want an itemized list of everything you paid them in 2020. Start there, okay? And once we have that part done, then dive in to this entire list. Now, if your head is spinning, I get it, okay? I have been there. I want to help you, all right? You guys can absolutely work with me. If you're not able to get on a retainer, which is what my regular clients do, I will do one-off consultations with you guys to help give you a personalized roadmap of what you have to do to close your books for 2020. You can send me a PM or you can send me an email to Denai@theChicCFO. I hope you guys enjoyed this video, and I will see you next week at the same time for another one of our trainings.